Small cap funds have always been a popular category among mutual fund investors, as these are the funds which provide the highest returns in long term. So, in today's video, we'll do a detailed comparison between two popular small cap funds, that is, SBI Small Cap Fund and Nippon India Small Cap Fund, and try to decide which one is better and in which fund one should invest. So, please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the basic details. Firstly, for SBI Small Cap Fund. Firstly, the AUM, that is the total asset under management, which is around 16,600 crores. The expense ratio is 0.73%, which is okay as compared to other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is BSE Small Cap 250 TRI. Now let's look at the basic details for Nippon India Small Cap Fund. Here, the AUM is around 26,300 crores, which is one of the highest in the small cap category. The high AUM for a small cap fund has been a topic of debate and is generally perceived that a small cap fund with a high AUM is not able to perform well. So in the later part of the video, we'll also see whether this theory is true or not. The expense ratio is 0.82%, which is a little bit on a higher side as compared to other schemes. The benchmark index is BSE Small Cap 250 TRI. Now let's look at the sector-wise allocation. Firstly, for SBI Small Cap Fund, from the table, it is very clear that the fund is heavily invested in services, followed by consumer discretionary and capital goods. Now let's look for Nippon India Small Cap Fund. Here, the highest allocation is to the capital goods sector, followed by finance and chemicals. And when you compare this allocation to the category, it is quite different for both the funds. Now let's check the portfolio allocation. Firstly, for the SBI Small Cap Fund. As evident, small cap shares form around 76% of the portfolio, whereas mid cap shares form other 18% of the portfolio, and only negligible, less than 1% is allocated to large cap stocks. Here, the portfolio is little concentrated, as there are only 54 stocks in the portfolio, and top 10 stocks form around 29% of the portfolio, and top 3 sectors form around 44% of the portfolio. Now let's look at the portfolio allocation for Nippon India Small Cap Fund. Here, more than 67% is allocated to small cap stocks, whereas mid cap stocks form around 18% of the portfolio, and rest 11% is allocated to large cap stocks. The portfolio seems quite diversified, as the fund is having around 169 stocks in the portfolio, with top 10 stocks contributing to only less than 17% of the portfolio, whereas top 3 sectors contribute to around 21.5% of the portfolio. The approach of both the funds are different, and we'll discuss this in the later part of the video. Just keep in mind that the total number of stocks in the portfolio are 169 for Nippon India Small Cap Fund. Now let's look at the top holdings. Firstly, for SBI Small Cap Fund. As evident, Blue Star, V-Guard and TTK are the main stocks of the consumer sector, whereas Triveni Turbine, Kalpataru Projects and Elgi are from the capital goods sector. Now let's look for Nippon India Small Cap Funds. Here, Tube Investments is the main stock of the automobile sector, whereas HDFC Bank and BOB are from the financial sector, whereas KPIT Tech and NIIT are from the technology sector. Here if you observe, leaving apart Tube Investments, no other stock is having an allocation of more than 2%. This is due to the huge number of stocks, that is 169 stocks in the portfolio. Here, the overlapping between the funds is only 12%, and none of the 10 top stocks are common in the portfolio. Hence, you can have both these funds in your portfolio. But the question is, are they really that good to have in our portfolio? Let's try to understand in the later part of the video. Now let's look at the fund managers. Firstly, for SBI Small Cap Fund, Mr. R. Srinivasan has been managing the fund since November 2013, that is almost from the inception of the scheme. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's look for Nippon India Small Cap Fund. Mr. Samir Raj has been managing the scheme from January 2017 and has recently been joined by Mr. Tejas Seth in February 2023. Here also, Mr. Raj has been managing the scheme since last 6 years, which is quite good and an advantage for the scheme. Now let's look at the trailing returns. Firstly, for SBI Small Cap Fund. On comparing the trailing returns for the period 5 years and more, it is able to beat its benchmark and category with a good margin. But if you see for 3 years and less period, it struggles to beat its benchmark and the category. This is not a good sign. Here, I feel that the increasing AUM is causing the problem as fund has only 54 stocks in the portfolio, and as you are all aware, small cap stocks have a limited volume which hampers the trading in the stocks. Now let's check the trailing returns for Nippon India Small Cap Fund. Here if you observe, for the entire period, the fund is able to beat its benchmark and the category, and that too with a good margin. Hence, we can conclude that here the fund's performance is quite good and consistent. Now let's check the rolling returns. Here we will check the rolling returns for 5 years, 3 years and 1 year and compare it to its index. Firstly, let's see the 5 years rolling return. From the graph, it is evident that both the funds have been able to beat its index 100%, and SBI Small Cap Fund is having better average returns with less standard deviation, that is, less volatility. Now let's see the 3-year rolling return. Here also, both the funds have been able to beat its index 100% of times, with SBI having a little better average returns and lesser volatility. Now let's check 1-year rolling returns. Here, the things changes as Nippon is having a better average return and is able to beat its index 95% of times, whereas SBI Small Cap Fund is having a lower average return with quite less volatility. Hence, from the rolling returns, it can be concluded that both the funds are having good returns. But for a longer time horizon, the returns of SBI has been better than Nippon with lesser volatility. But for a shorter duration, Nippon is having a better performance with a higher volatility. Now let's see how the fund performs on risk parameters before concluding what investors should do. Let's firstly look for SBI Small Cap Fund. First one, mean returns. That is the average return in a year, which is 33.14, which is less than both the category average and the benchmark. Here, the higher the value is better. Second one, standard deviation. That is a tool to measure how much the returns are deviated away from the mean returns, which in this case is 16.05 and is also less than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio. That is a tool to measure the risk adjusted return, which is 1.82, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta. That is the volatility of the scheme compared to the benchmark, which here is 0.74, which is less than the category average. Here, lower the value is better. Fifth one, alpha. That is a tool that measures how much better the fund has performed compared to the category. Here, it is 6.06, which is less than the category average. Here, higher the value is better. Now let's see for Nippon India Small Cap Fund. Here also, almost all the risk parameters are good as compared to its category and benchmark, except for the standard deviation and beta, which indicates that the fund is more volatile than its benchmark index and the category, but is able to generate better returns. Now let's see the upside and downside capture ratios. Firstly, for SBI Small Cap Fund, the upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 83, which indicates that the fund underperformed 17% more than the index during this rise period. Here, higher the value is better and should be generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 50, which indicates that the fund declined only 50% as compared to the index during the fall period. Here, lower the value is better. Now let's see for Nippon India Small Cap Fund. Here, the upside capture ratio is 102, which indicates that the fund overperformed 2% more than the index when the index rose, which is quite good for a fund. Here, the downside ratio is 61, which indicates that the fund declined 61% as compared to the index during the fall period. Here, lower the value is better. On comparing for both the funds, the upside capture ratio for Nippon India is better, whereas for SBI, the downside capture ratio is better. Hence, we can conclude that Nippon is marginally better than SBI as it has a higher upside capture ratio. Now let's see what investors should do. But before suggesting what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel to watch such interesting videos in future. So now coming back to the conclusion, what investors should do. Firstly, the existing investors. The performance of Nippon India Small Cap Fund is quite good, but that of SBI Small Cap Fund is not that good as compared to Nippon. So I feel that if you are invested in any or both the funds, you can continue your investment in Nippon without much worries. But for SBI, one should rethink as the performance has not been that good in last 3 years. But looking at its earlier performance and risk parameters, you can still give it a try for few more months. And if the performance does not improve, you can think to switch to a better performing fund. Second, the new investors. They can start their investment in Nippon India Small Cap Fund and may not worry too much about the rising AUM, as the fund has a vast and a diversified portfolio of around 169 stocks, and I don't feel that this rising AUM should affect much. For SBI Small Cap Fund, I feel that one should not start a new investment here, as the fund is struggling in performance and there are better options like Nippon, Quant, and Canara Robeco to start a new investment. I would like to add that I have both the funds in my portfolio and will be continuing my investment in these funds. I will again try to review this fund separately after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you.